So what metals and broader commodity prices are telling us right now is that inflation will come back in 2026. I've said it, I think Trump's gonna run this thing tremendously hot. I think Bitcoin, I stand by my $250,000 to $1 million this cycle. You know, this is not a bear market. I don't think the bull market ever really started if you look at Bitcoin in gold, but just try and think hard about what money is. A technology that solves for barter, the thing that you're acquiring in your life not to consume it. So when people say, I just bought a condo to live in, but it's also what I'm saving in. No, it's not. It's not. You're consuming it. It's not. You need to be acquiring something that you're saving, not eating, not living in, not flying. You need to make more than you consume and take that excess capital and save it in something. And do not choose silver and gold. You're going to get wrecked.
The markets may look calm, but beneath the surface, momentum is accelerating. Commodity prices, especially metals, are already creeping higher, signaling what most investors still refuse to admit. Inflation isn't finished. It's reloading, and it's likely to roar back in 2026. That's not speculation. It's becoming inevitable. If the next US administration unleashes spending, deficits, and easy credit, markets will ignite fast. Those clinging to old stories, inflation's beaten, the bull run is over, are missing the explosive shift building quietly beneath their feet. Momentum doesn't knock. It erupts. Suddenly. Jack Mallers sees that eruption clearly. He's not framing Bitcoin as a gamble anymore. He's calling it the only asset engineered to be real money when systems break. Real money, he argues, isn't consumed or diluted. You don't save by living in houses or burning fuel. You save by holding something that compounds power, survives chaos, and can't be debased. That's Bitcoin's role, not as a trade, not as tech, but as the engine behind a fast, furious, liquidity-driven bull run. Blink, hesitate, and it passes you by. Completely. And if you're still hiding in gold or silver? Mallers is blunt. In Bitcoin terms, he says, you'll be left behind. That's not fear. It's the final wake-up call. Let's watch clips from Jack Mallers' explosive analysis to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
So Bitcoin was very specifically designed to be money, to have a cost to produce so expensive that it's paid for in time, to have a supply so scarce that it's literally limited, to have a stock to flow so attractive it's the only one that can hit infinity, that will hit infinity. Something so easy to store and so portable, you could put it in your brain. Just what is money, actually? What's the definition? What makes a good money? And when Peter Schiff says, Bitcoin's bad money because I can't see it, I can't hold it, and I can't put it in a watch, why is he wrong? It's very easy to understand fundamental reasons of why he's wrong. Why Bitcoin has performed better than all of these things. Follow the stock to flow, follow the scarcity, follow the monetary properties. If silver gets high enough, I will literally go into the kitchen, melt all my silverware down, and eat with plastic forks. So here, I'll play it, although I hate watching my older self, but I'll play it. Take a listen.
Kelly, it's actually not that complicated, and I'm excited to try and convey that to America. There's a market term that's used here in Chicago a lot, is demand finds supply. What do I mean by that? If Ken Griffin is going to want to buy the most expensive condo in America, someone will build it for him. Someone will put a 201st floor in Miami's tallest building. If silver's going to 1000x, walk into my kitchen right now. I will melt all my silverware and I will sell it at market. If gold is going to rally, Elon Musk will find more on Mars. Bitcoin is, this is a super important point. Bitcoin is the only monetary instrument in the history of our species that is fixed. It does not matter how much more demand comes into the asset class, Kelly, no one will ever be able to make more of it. There are two things I can guarantee you in my life. One, that I'll die, and the other, that there will only ever be 21 million Bitcoin. And those are what's the two things that I can only value as my life and my Bitcoin. So it is the only fixed supply asset, Kelly. It's not that complicated. It's going to go up because everything else can be issued more.
It's a pretty simple concept. Like, if silver keeps going up, we'll all start eating with wood because it'll be more economic to melt the silver down, sell it, which will bring the silver price back down because it'll be a highly inflationary period. There'll be new supply entering the market. And you're like, that's not new supply, that's existing supply because that silver already existed. Yes, but it wasn't monetized. It's being consumed. So last night I had a ribeye and I used silverware. I used silver to eat it, but that wasn't monetized silver. It was consumable silver. By me making it back into money, by melting it down and selling it, now I'm adding to the monetary pile. I'm issuing new silver into the monetary market, which is why if you take gold out and you put it in a watch, gold gets a lot more inflationary because the 1.5% of new supply a year becomes 10%, becomes 50%, becomes 90%. You see? And so it's very simple. The higher you send commodities, the more supply you'll get. If a rich dude wants to put a floor on top of your penthouse, guess what? You don't have the penthouse anymore. Get f***ed. If silver goes high enough, guess what? We're all going to melt our silverware down and dump on your face. If gold gets high enough, guess what? Elon's going to go get all the gold from another planet. These are none of these things would I want to store all my time and energy in if I also had the option of Bitcoin. And people will, troll me on the internet and stuff, but guess what? That's why it's been the best performing thing over the last 15 years, hand over fist, not even close. And I'm not a day trader, and I'm not a trend trader, and I don't draw lines on charts. I'm talking about I work hard, I save for the long term in a thing. I have to pick what money I want. Remember, money's a technology. So when I go fly across the Atlantic, I pick what I want to fly in. Do I want to do a parachute? Do I want to sail a boat? Or do I want to sit in a Boeing? And I choose the technology that best suits me. Same with Bitcoin and gold and silver and the dollar. Trying to cross an ocean in a kayak is like using fiat. And then there's a parachute. And then there's like a little punter plane and a propeller. But there's a Boeing out there. You can just sit in that. It's the best technology for the job. So I wrote here, the reason this conversation is resurfacing right now isn't accidental. We're seeing stress everywhere. Housing, healthcare, commodities, miners. And at the same time, we're being told growth is really strong, which we'll get into in a second. The question is, what are we using for money? What should I use for money? I'll end this rant with a little bit of macro Trumpism, kind of like tie this on a go forward. Trump posted on December 23rd, the Trump rule. The financial news today was great. GDP is up 4.2% as opposed to the predicted 2.5%. And this is despite the downward pressure of the recent Democrat shutdown. But in the modern market, when you have good news, the market stays even or goes down because Wall Street's heads are wired differently than they used to be. In the old days, when there was good news, the market would go up. Nowadays, when there's good news, the market goes down because everybody thinks that interest rates will immediately be lifted to take care of the potential inflation. That means that essentially we can never have a great market again. Those markets from the time when our nation was building up and becoming great. Strong markets, even phenomenal markets, don't cause inflation. Stupidity does. I want my new Fed chairman to lower interest rates if the market is doing well, not destroy the market for no reason whatsoever. And he goes on to effectively say, we're going to run it hot, we're going to grow, and we're going to bring rates down with it. And so here from Mark Andreessen, it's time to grow. And Elon says double-digit growth is coming within 12 to 18 months. If applied intelligence is proxy for economic growth, which it should be, triple-digit is possible in the next 5 years.
Bitcoin isn't just digital money. It's a technological flex. Built to be scarce, borderless, and untouchable, it exposes the flaws in every asset people still cling to. Gold that can be melted, condos you live in, silverware you eat with. As inflation brews and markets distort, this isn't about price charts or hype anymore. It's about survival. You either store your time and energy in something no one can inflate, or you get steamrolled. The choice isn't coming. It's already here. The system is printing money and calling it growth. Meanwhile, people are throwing savings into assets that can be inflated or consumed. Silver? It gets mined and dumped. Real estate? You live in it. None of that is money. Real money lets you save today without being forced to spend it. That's the difference. In a world running hot with debt, inflation, and delusion, choosing the right money isn't optional. It's survival. Most people still don't get that. Let's watch more clips from the interview.
And we've talked about this, guys. The last time we had double-digit economic growth was after World War II, and the Federal Reserve's balance sheet 10x'd. 10x'd. So nominal growth is another way of saying an immense amount of money printing, an immense amount of debasement. It's inflating away the debt. And so here's why I kind of paired this at the very end, is make sure you understand what money is. Make sure you understand it's a technology and what makes it a good or bad technology. Because people are going to look at the price of silver right now, pour all of their savings into silver, not to understand that a higher silver price is only leading more silver supply. Creating more silver is not stuck in the future in 10-minute intervals like Bitcoin. Someone right now, as I'm talking, is digging up a ton of silver. They're going to dump it on the market. The price is going to come right back down. It's a consumable commodity. We use silver to eat dinner. We use silver for military equipment. We use silver for technology appliances. It's not money. Trust me. And so as they print a metric ton of money, as they debase and inflate away the debt they've created, as they run it hot with double-digit growth, we're running back the same playbook post-World War II. We're doing it again, wartime financing. Understand what is money, what makes a good money, and why is Bitcoin different? Because at the end of the day, people are going to decide what they want to use as money, the technology. I can't force everyone to sit in a plane, in the safety of a well-engineered plane, and cross the choppy Atlantic safely and quickly. I can't do that for them. This tweet from Robert is just reiterating what I just said. I will once again point out that the last time the U.S. had fiscal dominance, debt to GDP of over 110%, and negative real rates, commodities went up 150%. The Dow Jones returned 980%, and inflation peaked at 20%. We'll talk about it next week. What we're seeing from commodities and metals, the price action of things like silver and gold, these are leading indicators of inflation. Inflation will return in 2026. They are inflating and debasing away the debt. They are running it hot, wartime financing, and we can go back in history to get any semblance of an idea. The Federal Reserve's balance sheet is going to have to grow. This from Balaji, Western states create so much dysfunction that eventually they themselves become dysfunctional and effectively cease to exist. And what you're looking at is all the yields of the West. The US, Germany, Japan, UK, Italy, France. Yields up means demand for their bonds down. Nobody wants to lend these insolvent actors money anymore. You want me to lend to the United States? You got to pay me a lot of money to do something that dumb. That's what these are saying. So the West is having a tremendously difficult time financing its debt. If they can't finance the debt, they have to debase the debt. They have to inflate it away. They have to run it hot. One of my personal goals, whatever platform I have, I'm going to try and use it to communicate what money is, how to pick a good one, why I think Bitcoin's the best one ever. It's really that simple, guys. It's really that simple. And I put these in here just for shits and giggles. Zero Hedge pointed out about that surge in personal consumption. So like, oh man, GDP growth. Well, look at the largest consumption category in Q3 for all that growth. It was healthcare. Look at this. It's all a sham. Americans now spend more on healthcare than on groceries and housing. What are we talking about? Yeah, we killed it. Like, what are we doing? Understand money. Understand what makes a good or bad one. Buy yourself some Bitcoin. Take care of your family. Eat whole foods. Get in the sun. Exercise. Enough of the bullshit. Yeah, we're going to grow our way out of it because we're going to spend more on healthcare than groceries and housing. This is so ridiculous. So money is to save today without being forced to consume today. This was another thing I almost tweeted because I just thought it was a banger. Find yourself a technology that allows you to save today instead of being forced to consume today. We're better with a lower time preference, long-term thinkers, coordinators, planners. Make your future something worth being excited about because you can save for it. Take the value you're creating today and put it in your pocket for tomorrow. But it takes a technology to be able to do that. to teleport the value you're creating for others into the future. Not everything can do that. Not everything is as good as everything else. Bitcoin is uniquely built and good at that.
Despite escalating military tension between the US and Venezuela, Bitcoin continues to hover near the $90,000 mark, shrugging off what would have once triggered a market-wide panic. For a global asset that's supposedly volatile, this moment reveals something deeper. Bitcoin has matured into a safe haven, not just a speculative bet. It's not just traders who are noticing. Analysts across the board are pointing to Bitcoin's price stability above key technical levels, even as macro shocks unfold in real time. This detachment from geopolitical drama aligns perfectly with what Jack Mallers has been emphasizing. In his words, Bitcoin is no longer a market toy. It's money, engineered to resist manipulation, survive chaos, and store value like nothing else before it. Unlike silver, which invites new supply when prices rise, or fiat currencies that get printed into oblivion, Bitcoin stands apart with its fixed supply and incorruptible design. The current price action isn't just noise. It's a signal that more investors now understand what real monetary resilience looks like. As 2026 kicks off with instability on the global stage, the question isn't whether Bitcoin will react. It's whether the world is finally seeing it for what it truly is, the monetary lifeboat for a system addicted to debt, dilution, and distraction. This isn't a bull case, it's a reality check. And for anyone still trying to save in outdated stores of value, the market is starting to leave them behind. As we wrap up, if prices rise again in 2026, what asset do you actually trust to protect your savings? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching. Please don't forget to like and subscribe.